Hi, this is Shane with the Rational Trader. It's Wednesday, pretty much of a bloodbath of a day here. Let's take a look at the bigger chart here. So let's see. We came in expecting it to be volatile, and then watched it for the first 30 minutes and went, "Wow, this is pretty bad." Having looked at what happened the prior day, all right, and we were hovering around 7,400. So we saw here, back on Monday, that we had, from the previous week, we'd fallen from 75 down, past 74, but then kind of came back up, bounced back up. We're hovering around 74 here, all the way down to 73, and then all the way back up on Monday. And then yesterday, not quite as bad. The start of the day is around here, so that's around 7,400, pop up to 7,450 and then come back down to 7,370 before ending right at 7,400. And then these are big moves. It's easy to forget how big a move that is. And then we came in today and the market just fell apart. This is huge, right? So we go from 7,400 overnight all the way down to 700 or 7,000. So it actually finds some support there. I wouldn't call that support. It ends at its lows at 7,000 basically, and then has fallen through that overnight here. So the issue here is not, hey, oh my God, the market's falling apart. That's not what we're here for. We're here to understand how to day trade this. When the market is this volatile, it's almost untradeable. Well, as a human, I think it is untradeable. If I wasn't doing machine learning, I would not be trading this. When we look at the daily chart, this is the average daily range down here. If it's above that red line, it's stand aside time. The data that I collected as I've been, working through bringing machine learning online for the retail trader, is that if the average daily range of the NASDAQ is over 100, it's basically a coin flip, whether you're going to get killed, which means hit your max loss, or you can do okay. All right, sometimes you can do just spectacular and you can get real excited about that, but you have to understand that there's a huge amount of randomness now that's been injected into the market, and you can't predict randomness. And regardless of the patterns that you see, okay, your brain is constructed to find patterns, so it'll find patterns in randomness. And now we're back to average daily range levels of 150. This is craziness. Okay, but having said that, and so my loss today was actually more than I like to take. It's supposed to be 300 is the max. So for members here, let's talk about what happened here. I increased my stop to 15 ticks, and I'm trading 2 contracts, so that's $150 of risk. And so what the system does here, it looks at this number in the max daily loss category and says, if I've lost this much or more, I won't take another trade. Or rather, here's a trade signal. I need to have for the day. I need to have lost less than this number. And so you can see the problem here is that when I normally trade a 10 tick stop, but the market's been so crazy, I went to 15. And so what that means is I'm still only willing to risk 300. So I'm willing to take 2 losses in a row with no prior gains. And what that means is that one loss is 150. Okay, so that would be that, right? But I want to take one more trade. All right. So it has to be at least that 155. Okay, so if I take one loss, then I'll take another trade. Is what that says. The problem is that there's slippage involved. So I usually give it a few ticks, and in this case, I would go to like that. So that's what it'll be. That's what it would be if I was going to stay at this rate. I got to think about whether or not it's worth trading as. Even with the machine learning system. So I'm going to give that some thought tonight and then make a decision in the morning. Having said that, now this is the loss for today. There's a model that's being simulated that shows a net gain, and that's interesting. Now, it could just be random. All right. It is a refinement on what I've been working on. The astute observer will notice this is Rev 55 here, and this one's Rev 69. So there's been a fair number of incremental either improvements or attempts to improve that didn't pass muster. What is interesting is that yesterday, the live account was up 350 but ended down 250 on the day, so that's a $600 swing, which I don't like that in general. But the sim was, what was the number? The run up was 1100. That ended up basically flat. So the potential to gain there is pretty high, given this model. I'm really curious to see if that holds or if it's just luck. All right, I'm curious enough that I actually I'm building a model using this architecture that has data to learn on only through the end of August, and then I'll run a test for September forward and see what those results are. I've been working towards a change here because we've been incrementally adding information about more precisely choosing where to enter. And the model architecture I'm working on is aimed at that. This is just one step towards that. So we'll see. We'll run those tests, and then I'll share those at the next update. I got to build the model. That'll take several days by itself. And then we'll run the tests. And that unfortunately, given the current state of the system, once we introduce volume profile, the replays take a really long time now. So I don't have a program written yet to do that test outside of the charting platform. So I've been planning on doing that, but keep getting sidetracked with other things. So we'll get there. So tomorrow, what is likely to happen is I will reduce the risk I'm willing to take, or not trade. All right. So according to my risk rules, I need to stop because I've lost enough this week that I need to stop. But since I'm running a trading room, I tend to push the boundaries of those rules since people want to see what's going on. In this case, I can sim, so it's sort of the same. Nevertheless, it's important to understand when you should stand aside, right? So what we talk about here is that conditions like this are like, sailing a boat in a hurricane. You're gonna capsize and sink. You really need to head for shore. And I think that's the case here. Certainly, without machine learning, I would not be trading at all. I'd just be watching it sort of in awe. The previous set of rules that we would be using were we would choose a direction at the beginning of the day, and then only go in that direction and only go on and on breaks. Now I'm not doing that now because I've got the machine can make the decisions fast enough and can place the orders fast enough that's not necessary. But that's the kind of thing you got to do if you want to try this. Again, if I wasn't running a trading room, I wouldn't be trading at all. I'd just be standing aside watching. Without machine learning, we'd likely just be sitting here watching it. With the ML, I'd actually have a choice to give it a try, so I can control it so tightly about what to do. So we'll see. In the meantime, people tend to overestimate and underestimate in all the wrong ways. So they will have the markets go crazy, and then they'll think it's going to be like this. It's going to be like this forever, and it never is. But it generally takes longer to settle back down than you think. Everything takes longer than you realize, and so this particular case here is the longest extended run of high volatility that I've seen in 10 years of trading. So this is, we were normal up to about here. All of this was, this is not bad. But at this point, February 2nd is when it went berserk. And it was really crazy, through May. That's a lot. That's 3 months. And then it started to settle back down, but then it's popping back up again. So we have quite a bit to work out here. I think when you think it through, you can see why. This is the weekly chart. We've had a long. This doesn't go back far enough to really help you understand how long the bull run has been. It's been since. I guess maybe it does, because this is 2009. This is sort of the bottom of the pain from the initial crisis. So this is here's 9 years of the weekly chart, just huge extension, huge continuation without any kind of pullbacks. Just you had a little one there and a little one there. It looks little. It was actually huge at the time, but then it just continued on, right? And now we've got another. You can see look at the amplitude of the moves as we've gotten higher and higher and higher, right? There's more and more that has to get worked out, and so it'll take longer for the system to kind of work itself back to some sort of equilibrium. In the meantime, we need to protect ourselves. So assess the conditions and then trade accordingly. Okay. So for members, we'll talk in the morning. Okay. I might drop to just one trade. And if I get taken out, then I'm done. And then we'll talk about this test going here on the left and when the next update is. And what we want to do is see how that model's performing, even in these crazy conditions. But then also get a test going that is more comprehensive than just a couple of days or just a week, which is kind of what we've been limited to recently because of the how long the replays take. Okay, so we have that to look forward to. Other than that, discretion is the better part of valor. Don't be shy about standing aside.